The real estate market is changing right beneath our feet. What adjustments do we need to make as a real estate investor to make sure that we're not on the wrong side of these things? In this video, I'm going to cover the 5 questions that I'm getting asked here today. But the first thing that I want to cover is that people make money in any real estate market. You can make money in every single market out there. Money just doesn't disappear. Somebody is on the receiving end of that money. Our strategy may have to change, but people are making money in every single real estate market for the last hundreds and hundreds and hundreds of years. So that's the first thing I wanted to cover. Make sure you smash that like button for the YouTube algorithm. And our first question here that we tend to get asked often is, Austin, what is the expected profit that you look for on a flip? So usually outside of, some crazy market that we may likely be in here soon, I usually look to make like 15-ish% net profit, meaning if I sell the property for $300,000, I want to make about 45 grand. That's after paying realtor fees, construction costs, private money, interest. After paying everything, I want to put about $45,000 in my own pocket. Over the last couple of years, I've cut that down to maybe 12 or 13% on certain projects. The reason you want to have high profitability is in case something happens. If the market does crash 5, 10, 15, 20%, you want to have enough profitability on the deal that ideally you don't lose money, you just make less money. So let's say you're selling a $300,000 house, you're hoping to make 15%. Let's say the market crashes by 10%. Guess what? You still make 5% in profit. Let's say it crashes 15%. Okay, you break even. Let's say it crashes 20%, which is a massive crash, by the way. That's an unbelievable crash. Then you may potentially lose a little bit of money. But what I'm looking for with flipping houses is 15 to 20%, ideally 20%, especially in a market like this where it is more risky. You want to have more profitability in the deals. So make sure when you're buying deals and you're underwriting deals, they do have a large enough profit margin. So if something were to continue to happen with the real estate market, that you don't get caught holding the bag and losing money. The second question I often get is, when you refinance, do you use the same bank or different banks? Again, right now is a perfect time to talk about this. So ideally, most people would use the same bank because they have the same documents, they already know the terms, they already know the rates, they just continuously work with the same banks. The problem is when something like this happens, when interest rates are going through the roof and banks are changing their underwriting guidelines to change with the ever-changing market, the thing that you may be used to getting may have changed. Not may, most likely would have changed. So if you only work with one bank and that bank changes, now you have to go out there and you got to find other banks to, finance and or refinance your purchases or your refinances or your real estate. And I've had banks over the last 2 months or so change their underwriting guidelines. So I've had to adapt with the market. Some banks are still doing what I need them to do. Other banks are not. Other times I need to call around and find entirely new banks to work with. So it's an ever-changing market in real estate. What I would recommend when working with banks is to have multiple options with banks that you can work with. So if anything does change with one of them, then you can still go to another one and have an option to finance the property or refinance or whatever your game plan is. Now, this is a big question that I get, is who's the hedge funds, right? Previously, up until about 60 days ago, hedge funds were buying everything they could get their hands on. Everything they could buy, they were trying to buy to put into their rental portfolio. The problem now is that a lot of hedge funds have stopped purchasing real estate. So they turned off the buying. Literally, we get messages. I'm in a bunch of group messages with a lot of real estate investors, and they're like, yo, this hedge fund just stopped buying. At least in my market. How about other markets? They're like, hey, they stopped buying in my market too. Hey, they have a temporary pause right now. So the thing that is happening, these hedge funds that were buying, as much real estate as possible have turned off the acquisition mode. And guess what that means? That means there potentially could be more supply on the market because these hedge funds aren't buying these deals. Or it could also potentially mean that there's an opportunity for homeowners to get into these properties and actually own real estate instead of renting real estate. So that's a big thing to pay attention to, is if hedge funds that were buying a lot of real estate stop buying, which they have, how long does that last for? And if it lasts for an extended period of time, how does that affect the current real estate market and the supply and demand of real estate? Then how about this question? Do I have to use other people's money to buy, or if I have a pre-approval of $200,000? The thing when you have a pre-approval of 200 grand, it still means that you have to have a down payment for that property. So let's say you're buying it for 250, you have to bring $50,000 as the down payment, and then the bank will finance the other $200,000. So the question is, do I use other people's money? I always use private money lenders' money because I don't want to put my own money into these real estate deals. And again, as we're talking about the market changing, and I'm not saying saying this is going to happen, but if, some huge real estate crash happens, guess what? There's never been a person that I've met ever in my entire life that said that they wish they would have bought less properties in 2008, knowing what they know now. Everybody said like, man, like if I knew what I know now, I would have bought everything I could have bought in 2008 because they're worth drastically more now. So let's say this, huge, massive crash that everybody keeps talking about actually does happen. That means it's going to be the best buying opportunity probably that we'll ever see in our entire lifetime, right? That was 14 years ago, so I was 15 years old when 2008 happened, so I didn't have an opportunity to buy real estate at the time. Now I know, and if that happens again today, raising money, using other people's money, raising as much money as possible to then go out there and buy as much real estate as possible, you'll be thanking yourself years down the line, right? It's gonna suck, I want to clarify, if this huge crash happens, it's going to suck. Like, it's going to be a very tough time for a lot of people. You're probably going to have to make some sacrifices. You're probably going to have to give up some things. But coming out of that, over the following, 1, 2, 3, 4, 5 years, you're going to look in the mirror and thank yourself for actually being able to go out there and purchase real estate and make the buying decision that a lot of other people were not willing to make because they were in scarcity. They were fearful when you were out there and you understood the larger picture. So being able to raise other people's money to fund your real estate deals is going to be huge in this upcoming market. And then this one, what was your first year of wholesaling real estate like? It took me 16 months to make my first penny in real estate. 16 months of looking at deals every single day, of doing marketing every single day, of talking with sellers every single day to get my first deal. So the short answer is it sucked. People want to have that immediate success. The first month or second month or sixth month, they want to have some sort of success, right? We just had a student in one of our coaching programs that joined 2 months ago and just did their first deal and made $20,000 in a 60-day period. That's incredible. And that doesn't always happen. For me, it took 16 months instead of 2 months. But again, if you stick to it long enough, you're gonna thank yourself in the long run. And the big question of it all, Austin, is this real estate market going to crash? Let me grab, you gotta bear with me. This is like my crystal ball, right? I know it's not crystal, but this is what I'm gonna use as a crystal ball. It doesn't work. Anybody who's telling you exactly what's going to happen in this real estate market, it's an educated guess. Right? Nobody knows what's going to happen in this market. I've seen the arguments on both sides, and I agree with some of the arguments on both sides. Nobody knows what's going to happen into this market. What I can say is people say cash is trash. I think having a cash position right now in today's market, in my opinion, is okay. Even though you're losing money to depreciation, I would rather have cash. So if and when an opportunity comes, I have cash available to make that investment, to jump on that opportunity. So for me personally, I'm not, blowing all my money fast. I'm keeping a decently sized cash position. And by the way, the only reason, people fail or lose money or go out of business or whatever it is in a down market, in a recession, in a crash, is from lack of cash flow. It's not lack of cash, it's from lack of cash flow. So if you can find a continuous way to bring money in, whether that's working a job, whether that's owning rental properties, whether that's wholesaling real estate, whether that's, building an online presence, whatever it is, if you can have cash flow continuously coming in, you're going to find a way to make it out of this. Things are changing literally by the day right now in the real estate market. So something you have to pay attention to. If you want to continue to follow what I'm doing in the real estate market, make sure you smash that subscribe button and smash that like button for the YouTube algorithm. I greatly appreciate that. But remember this, there's always money to be made in real estate. Again, you may have to change your strategy. Instead of wholesaling, you may have to start buying rentals. Instead of buying rentals, you may have to do subject to. Instead of subject to, you may have to start doing seller financing. There's always different strategies within real estate that you can get paid on. So make sure you hit that subscribe button so you can see what I'm doing as this market continues to figure out what it's doing, and drop any questions you have below as well. I love to connect. I love to hear your feedback. So drop any questions you have below or thoughts, and we'll see you on the next one. Appreciate you being here. Peace.